Did you learn nothing, old man? Betting on steel again? Hey everybody, Walrus here from Walrus Street with your weekly for the week of January 25th, 2021. Just a reminder, I am not a financial professional. All information in this video is for entertainment purposes only. Alright, that was a bit of a better week. The markets tended to be up. Friday was another red day, just like last week, but unlike last week, we did finish up on a net positive for the week, so that was nice to see. We've got earnings season in full bloom, and there's a lot to be excited about this week. But first, let's cover some of the top news from last week. Just a reminder, I do post my own technical analysis for the stocks that I follow underneath my video every single week. This is not the greatest technical analysis, but it is my practice, and I just want to share with you guys what I'm doing, what I'm looking at. The link is going to be below the video. Because I did include a new company that I'm going to be covering on my DD video this week, I will update this link Monday morning Eastern time, because I don't want to blow the secret and show you guys which one I'm adding for my DD video. I'm releasing the DD video on market open on Monday because I know not everybody has access to pre-market trading, and I'm trying to avoid the hype that happened with SENS last week. First news story, Janet Yellen says Biden must act big with coronavirus relief package. Janet Yellen is Biden's Treasury Secretary pick. She's in the process of being confirmed right now. She probably will be. She's very qualified. Just a couple of quotes here. This is from her testimony at her virtual hearing. She said, the smartest thing we could do now is act big. And she basically said the benefits are going to outweigh the risks in this case. Her testimony was a marked contrast to the Trump administration's fiscal priorities. She called climate change an existential threat and argued international cooperation was needed to end the destructive global race to the bottom on corporate taxation. Whether or not you agree with her fiscal policies, the reality is this is what we're going to be dealing with for the next 4 years, and we need to invest accordingly. From her sentiment, and you know that she's a mouthpiece for Joe Biden since he selected her, you can tell that she's going to be prioritizing on increased corporate taxes and spending that's going to help curb climate change. Neither the president-elect nor I propose this relief package without an appreciation for the country's debt burden, but right now with interest rates at historic lows, the smartest thing we could do is act big. I believe the benefits will far outweigh the costs, especially if we care about helping people who've been struggling for a very long time. You could tell she's not really worried about increasing the national debt, which is already really high, and instead she's just going to be focusing on spending. She wants to rebuild the US economy so it creates more prosperity for more people and ensures that American workers can compete in an increasingly competitive global economy. That sounds like she wants to make sure that there is more money being distributed to the lower economic strata, and for a consumer-based economy, that could be good. I definitely do want to keep an eye out for this one. Jack Ma emerges for the first time since Ant Alibaba crackdown. My oversold Mr. RSI is back. I'm so happy. If you don't know, Jack Ma wanted to bring Ant Financial Group public, but the Chinese government said no. Basically was worried about a monopoly with Alibaba controlling Ant, both of them on the market together. Afterwards, Jack Ma mysteriously disappeared and wasn't seen for months. Beijing's crackdown followed an October speech by Ma in which he famously rebuked pawn-shop Chinese lenders, regulators who don't get the internet, and the old men of the global banking community. This guy's balls are massive. Ma's comments on Wednesday struck a much different tone, echoing themes espoused by the ruling Communist Party. A former English school teacher, he spoke about the importance of reviving China's countryside and narrowing income disparities by encouraging the return of younger talent to rural areas. Recently, my colleagues and I have been studying and thinking. We made a firmer resolution to devote ourselves to educational philanthropy, Ma said during the event. Working hard for our rural revitalization and common prosperity is the responsibility for our generation of businessmen. That sounds an awful lot like social reconditioning. I'm definitely glad that he's back. This is going to give people a little more confidence to invest in the Chinese markets. Netflix shares rise on strong subscriber growth, considers share buybacks. This was the big one. This was the first of the FANG companies to report last week. They reported earnings that beat analyst expectations on revenue and subscriber additions, but fell below EPS estimates. Two positives, one negative. The company said it's close to being cash flow positive and will consider returning cash to shareholders through buybacks. Buybacks, of course, are a way for the company to push the share price higher. Netflix said it would no longer need to raise external financing in its daily operations. Really great. This sounds like a financially healthy company. Here you could see their earnings per share is a little lower than expected. Revenue was a little higher than expected. They ended up adding more subscribers than expected by over 2 million. That's big, especially since I'm not one of those 2 million and I canceled my Netflix account. I'm sorry, Netflix, I'm not doing my part. Crypto! Bitcoin plunge has newbies scrambling to Google double spend. There was a big Bitcoin drop. It ended up falling down to like 30,000. Somebody ended up saying that there was a double spend where the same Bitcoin was spent twice. Down here, there's a quote at the bottom of the article on Bloomberg from Andreas Antonopoulos, who is like a crypto expert. He's been in the scene forever. The Bitcoin blockchain is operating exactly as designed and has been operating exactly as designed for 12 years. What we saw today was a one-block reorganization. These occur on average every 2 weeks, and they're a normal part of the consensus algorithm. This was a massive drop over nothing. Got it. Bitcoin is a stable investment. You can see here, Bitcoin's price is already back up to 33,000 after dropping to 3,000. It was at what, 40? I think it hit 40,000. If you guys are curious, I actually do hold some cryptocurrency investments. I have a very large holding of Cardano, ADA, and I also have a pretty substantial holding in Icon, ICX. But I don't hold any Bitcoin. We got to talk about the GameStop price action. This is from Barron's. The title is Short Squeeze Sends GameStop Shares to 2007 Levels. What happens next? You can see just the price over time. We ended up hitting like, what is this saying? 72.88 on Friday. Back in 2007, the high was 62 after Christmas. So this is at an all-time high. The problem here is we all know the short squeeze is coming and it has sort of started already, but Friday's massive price jump wasn't actually part of the short squeeze. Friday, GameStop had what was called a gamma squeeze. The squeeze can begin when a large investor, typically referred to as a whale, buys short-dated call options. In this case, it may have been triggered by retail investors and everybody that's betting against the short sellers for GME, buying the 1 week and the 2 week call options. The banks or brokers that sell the call options buy the underlying stock so they have exposure. The more options are purchased, the more shares the brokers have to buy. The option purchases force the dealers to buy the underlying stock, which can push the share price higher. If this is pulled off, this creates a positive feedback loop and it can drive the underlying stock prices higher for a period of time. In a roundabout way, the dealers have to buy more and more of the underlying, in this case, GameStop stock. A Reddit post by Cytokine Storm, how Friday's GME gamma squeeze may trigger a short squeeze on Monday and Tuesday. So the gamma squeeze on Friday was because all of the $60 call options, which were the highest call option, all of them expired in the money. That doesn't happen. And the market makers couldn't cover fast enough. They couldn't get the shares fast enough. GME closed at $65. Every single call that expired yesterday being Friday, was in the money. The market makers and brokers are going to have to deliver all of these shares when these expired options settle, typically settlements on Tuesday. I've read estimates that 10 to 15 million shares worth of calls expired in the money on Friday. How does this actually relate to the short squeeze then, if this is a gamma squeeze? It can, because now there's 10 to 15 million shares tied up in the clearinghouses, and there's even fewer shares to be borrowed. Keep in mind, these shares had to be purchased, borrowed to pay back for the shorts. There's estimates that the true short interest on this stock was around 300%. Now, with around 20% of the total float committed to the clearinghouse as they sort out what happened, I expect true short interest is closer to 500%. Now, this is just a random Reddit user. He's kind of thrown around these percentages. That's not the important part. The important part is the fact that there are now fewer shares of float available for the short sellers to buy back to get out of their crappy options. There's a possibility here, depending on the price action, of an infinite gamma squeeze. Infinite gamma squeeze is going to propagate this kind of positive feedback loop where people keep buying out the highest priced options, which forces the brokers to buy the stocks, which keeps forcing the stocks above the highest priced options, causing them to close in the money. And you can see how this is just a positive feedback loop. They buy more stocks, the call options get bought up. They buy more stocks, the call options get bought up, and it just shoots the price up. So this is the GameStop chart here, and you could see exactly what's happened so far this month. We started the month below $20. Intraday here, they're saying it actually reached 76, but we closed at 65. This is insane gains. Also, you can see there's no short ratio here on FinViz, and that's because nearly all brokers, in fact, I think all brokers right now are prohibited prohibiting anybody from shorting the GameStop stock. They're aware that this squeeze is happening. Now, if you look at the high short interest stocks, GameStop is still projected at being 138% shorted. This is kind of a guesstimate, and most people actually think it's higher. That's why that Reddit poster was throwing around the ideas of like 300%, 500%. Even if they're wrong and it is only 138%, this means there's more stocks shorted than actually exist. This is a problem, and this is where the squeeze comes in. For the last bit of news this week, I just got something fun for you guys. You know, we talked about ARKX, the new space ETF for ARK. There's a big kind of speculation game in the investing community as to which stocks are going to be in this ETF. There's obvious ones like, of course, Lockheed, Boeing, and Virgin Galactic are going to be included in this ETF, but what about some of the other ones? I'm going to put a compelling case forward here to you. I've kind of pieced this together, and I believe that Stratasys, which is a 3D printing company with a very small market cap of $2 billion, is going to be included in this ETF. And let me show you why. The ARKX ETF is already available in Japan, and it has been traded for a little while. This is a September statement for the holdings in this ETF, Twitter user FPTXYZ released. You can see from top to bottom, Stratasys and Protolabs are right here, the 7th and 8th largest holdings. These are both 3D printing companies. Protolabs has a huge market cap, but Stratasys only has a $2 billion market cap. And you could see some of the other companies on here. There's our Virgin Galactic, Lockheed was on the first page, here's Boeing down here. Those are the ones you would expect. This is on the ARK Invest website. They do have a 3D printing ETF, which is an ETF just dedicated to 3D printing. And in the prospectus for that ETF, you could see Stratasys is the 3rd largest holding. Protolabs is the 5th. But Stratasys right here, 3rd largest holding in this ETF. ARK has a propensity to recycle the same companies in multiple ETFs. In their space exploration ETF on their website, you can see that one of the focuses is going to be on 3D printing. I think it's very reasonable to assume that ARKX is going to be including Stratasys. Stratasys has had a really big run up, but this isn't on the rumor of the ETF. This is on the back of some earnings news from DDD, which was much higher than expected. That's another 3D printing company. So Stratasys has already run up significantly, and this makes this a little bit risky, but I don't think it's that risky because we haven't had the official ETF announcement. So for a short-term play, I think getting into Stratasys is not a bad decision. Let's take a look at the earnings reports for this coming week. It's a crowded one. It's just amazing. There's actually something close to like 400 companies that are reporting this week. Microsoft, Apple, Tesla, Visa, just these massive companies, McDonald's, Johnson & Johnson. I can't even say all of the big ones that are reporting this week. I'm interested to see the earnings report for 3M because of all of the PPE they're manufacturing for the pandemic. And also there was a report coming out of 3M this week that they were laying off employees, thousands of employees. On one hand, I feel like their earnings report should be really great, but then why are they laying off those employees? So I'm interested to see what happens with 3M this week. I have a significant portion of my retirement portfolio in Microsoft, and for the last several earnings reports, the development of Azure has been driving their earnings, and I'm very excited about Azure, and I want to hear how Azure has been paced, how it's selling for the last quarter. The last one here is US Steel, ticker X. Last week, I did an options play on Cleveland Cliffs. It was a 2-week options play, so I still have a chance, a very slim chance of coming out on top, but it's not looking very good on that one. What can I say? You win some, you lose some. My thesis on steel is right, but my time frame might have been a little bit wrong. We've got US Steel earnings coming out this week with X. I'm probably going to play some options on this one. Did you learn nothing, old man? This is probably stupid, but I'm doing it anyway. We've got US Steel coming in at $18.91 a share. You could see they've actually beat earnings on their last 4 reports. Steel prices are still high. They reached levels not seen since 2008. Big River Steel started a second electric arc furnace. Well, guess what? Big River Steel was just acquired by US Steel. Their profits are going to become US Steel's profits. This is from Zacks Equity Research. They're saying that improved end market demand and higher steel prices are likely to have aided its 4th quarter results. The company is also expected to have benefited from its actions to improve cost and operating performance in the quarter. The consensus here from Zacks is that this is going to be a very positive earnings report. Here you can see the US Steel chart. We've had a massive retracement. We ended up going up as high 2 weeks ago as $24, $25 intraday, and we've dropped all the way back down below 19. And you can see once we crossed that 19 threshold, the drop kind of just stopped in the middle of the day after all these red candles. The price action has almost retraced back to the 50 SMA, and the 50 SMA is kind of a psychological support for US steel. It's been staying above the 50 SMA pretty consistently, but it hasn't really touched it since back at the beginning of October. Let's take a look at my Robinhood options plays for the week. It was a pretty good week last week. Most of my options are positive, except for that Cleveland Cliffs option that's killing me, but that's okay. You win some, you lose some. I'm going to be a little more conservative this week in my options plays, and that's because all of the big names are reporting this week their earnings, and sometimes that adds a lot of uncomfortable volatility to the market. So I am going to be moving out 2 weeks for my options plays this week, because while I assume it's going to be a net positive for those companies, it's always better to be a little safe than sorry. So we're going to move out to February 5th on Rocket, and I'm going to go ahead and do some put credit spreads on Rocket. So I'm going to sell the 1850 put, and then I'm going to buy back the $18 put credit spread, total credit 15. I'll do one of these. Got it. Only $50 in collateral, that's fine. There we go. I'm going to do the same thing on Nokia. Nokia had a pretty good rise last week, so let's go to trade, options. We're going to go out 2 weeks, and we're going to go ahead and sell the $4 put, and we're going to buy back the 350 put, $10 in credit. One, yes, $50 in collateral, that's fine. Good. Also, we're going to do the same thing on Ford. Trade, options, go out 2 weeks, and we're going to come down here. We're going to sell the 1050 put on Ford, and we're going to buy back the $10 put. One of those, $12, 50 in collateral. Swipe up to trade. Good. So for Virgin Galactic, we're going to do the same thing. We're going to trade options. We're going to move out 2 weeks. And we're going to come down here. We're actually going to move pretty far down for Virgin Galactic because it just had a massive price spike. And we're going to go ahead and sell the 2950 put. And we're going to buy back the 2850 put. And this is a little bit wider of a spread. One of these. This is going to have $100 in collateral. And then for my big play this week, we're going to go out to X. That is US Steel. We're going to go out 2 weeks to February 5th. And we are going to buy some calls. And right now the share price is $18.92. So I'm pretty confident with this call here. And I'm going to go ahead and do 2 of these contracts for $400. Good to go. There you have it. That's what I'll be doing this week. I don't want to touch GameStop because of the squeeze, but there we go. I want to thank you guys so much for stopping by. I hope you enjoyed the news video this week. I'm going to be posting my DD video on about 9:45 a.m. Monday morning. This is going to give everybody the opportunity to have access to an open market in case they do want to make the purchase. I know that there's been some price run-ups after my videos for the last couple weeks pre-market, and the people that are interested in buying end up suffering a little bit that don't have access to pre-market trading. So I'm trying to make this a little more fair and equitable for everybody. Hope you guys enjoyed the video. If you did, please like the video, subscribe to the channel, and if you want access to all my content as soon as it goes live, make sure you hit that notification bell. If you're new to investing, please check out my Robinhood and Webull accounts. The referral links are below. I've been recently partnered with Webull as an influencer, so my rewards, if you use my referral links, are significantly greater, and I would much appreciate that. All right, guys, thanks for stopping by. See you later.